The electric car market is about to face a shocking reality. The promise of a sustainable future, filled with quiet, eco-friendly vehicles, is turning into a dangerous game of financial speculation. Billions of dollars are at stake, investors are going all in, and the euphoria is blinding many to the warning signs. What happens when the technology of the future meets today's economic bubble? Tesla, Rivian, Lucid Motors, names that have become synonymous with innovation and the future. But the truth behind the glare of screens and headlines is much more complex. Companies being overvalued, promises of astronomical profits based on shaky projections, and a market growing faster than infrastructure can support. These elements are creating an unstable landscape that could collapse at any moment. Are we really ready to face the consequences? History has a cruel way of repeating itself, and we are on the brink of a collapse that could redefine the world of business and technology. Investors, consumers, and even governments are playing a high-stakes game where the stakes are higher and higher. Are you prepared for impact? What would you do if the market collapsed tomorrow? These are questions we all need to consider as we closely observe the largest bubble in history about to burst. 1. What is an economic bubble, and how does it apply to electric cars? An economic bubble is a phenomenon in which asset prices rise rapidly, disproportionate to their intrinsic values, driven by speculation and market euphoria. Bubbles form when investors buy assets with the expectation of selling them at higher prices, creating a vicious cycle of inflated valuation. Eventually, the discrepancy between the price and the actual value becomes unsustainable, leading to an abrupt correction and a drastic drop in prices, causing significant losses for investors. In the context of electric cars, several signs indicate that the market may be heading for a bubble. The rapid appreciation of shares of electric car companies, often without a solid profit and revenue base, is a strong indication. Companies like Tesla, Rivian and Lucid Motors have seen their market valuations skyrocket, based more on future expectations than current financial performance. This disconnect between price and intrinsic value is a classic warning of a potential bubble. In addition, the enthusiasm around technological innovation and government policies to encourage sustainability has further fueled this price inflation. Investors are betting heavily on the future of electric cars, often ignoring the associated risks and challenges, such as production problems, insufficient charging infrastructure, and fierce competition. This combination of factors is creating an environment conducive to the formation of a significant economic bubble in the electric car sector. 2. Exponential growth. The meteoric rise of electric cars. In recent years, the electric car market has experienced exponential growth, driven by a combination of technological advancements, favorable government policies, and changing consumer preferences. The number of electric cars sold globally has increased impressively, with many traditional companies in the automotive sector entering the race to offer electric models. This rapid growth is fueling heightened expectations and attracting massive investment to the industry. Government support has been one of the main drivers of this growth. Many countries have implemented financial incentives, such as subsidies and tax exemptions, to promote the adoption of electric vehicles. In addition, ambitious carbon emissions reduction targets are putting pressure on automakers to accelerate the transition to electrification. However, this frenzied rush is also leading to an overvaluation of the market, with many investors betting on a utopian future without considering the practical and economic challenges. Despite the excitement, the electric car market faces numerous obstacles that could put the brakes on its growth. Charging infrastructure is still inadequate in many regions, and mass production of batteries faces logistical and environmental challenges. Additionally, competition between businesses is intensifying, which can lead to market saturation and reduced profit margins. These factors need to be carefully considered to avoid forming a bubble that could burst with devastating consequences for investors and consumers alike. 3. The startup war. Fierce competition in the electric car market. The electric car market has seen a proliferation of startups trying to capitalize on the growing demand for sustainable vehicles. Companies like Rivian, Lucid Motors, and NIO are making a name for themselves and attracting substantial investment, often rivaling established automakers. This fierce competition is one of the signs of a potential bubble. As many of these startups are being evaluated based on future expectations, rather than actual performance. The rivalry between these startups is intense, with each company trying to differentiate itself through technological innovation, design, and performance. Rivian, for example, is focused on sport utility vehicles and electric pickup trucks, while Lucid Motors positions itself in the luxury segment with its Lucid Air sedan. Despite the enthusiasm, many of these companies have yet to prove their long-term financial viability, which raises questions about the sustainability of their market valuations. In addition to competing with each other, these startups also face pressure from large traditional automakers that are entering the electric car market. Companies such as Ford, General Motors, and Volkswagen are investing heavily in their own electric vehicle lines, further increasing competition. This situation creates a volatile environment where only the most resilient and innovative startups can survive, while the least prepared ones are at risk of failing, contributing to the bursting of the bubble. 4. Tesla, pioneer or catalyst of the bubble. Tesla is widely recognized as the pioneer in the electric car market, transforming itself from a small startup into one of the most valuable companies in the world. Tesla's success has inspired many other companies to enter the market, but it has also raised concerns about the possible formation of a bubble. Tesla's shares have shown an extraordinary appreciation, often without correspondence with the company's financial and operating results, fueling speculation of an overvaluation. The charisma and vision of Elon Musk, CEO of Tesla, have played a crucial role in building the positive perception around the company. Musk has a unique ability to attract investors and consumers alike, promising breakthrough innovations and a sustainable future. However, this same ability can be seen as a factor that is artificially inflating Tesla's market value, creating expectations that may be impossible to achieve. Additionally, Tesla's reliance on carbon credits to maintain its profitability is a point of concern. While these credits are an important source of revenue, they are not a long-term solution. As more electric car companies enter the market, the availability and value of these credits may decrease, negatively impacting Tesla's profitability. These factors combined suggest that while Tesla has been a pioneer, it may also be catalyzing a bubble in the electric car market. 5. Risky investments. The role of venture capital investors and funds. Venture capital investors and funds have played a significant role in the growth of the electric car market, injecting large amounts of capital into startups and emerging companies. This influx of money has allowed many of these companies to rapidly scale their operations and develop new technologies. However, rushing to invest without a rigorous assessment of the risks involved may be contributing to the formation of a bubble. Many electric car startups are being evaluated based on future projections of growth and innovation rather than current financial performance. This speculative approach can be dangerous, especially if expectations are not met. The history of the financial market is replete with examples of bubbles that burst when investors realize that their expectations were unrealistic. The electric car market may be no different, and the current overvaluation could lead to an abrupt correction. Additionally, excessive focus on rapid growth can lead to unsustainable business practices. Startups may be tempted to exaggerate their capabilities or promise more than they can deliver to attract investment. This can result in a race to the bottom, where quality and sustainability are sacrificed for the sake of short-term goals. Investors need to be cautious and carefully evaluate the companies they are investing in to avoid being caught off guard when the bubble bursts. 6. Sustainability or hype. The true environmental impact of electric cars. Electric cars are often promoted as the ultimate solution to the environmental problems caused by combustion vehicles. However, it is important to critically examine whether this claim actually holds up. The production of electric cars, especially batteries, involves processes that have a significant environmental impact, including the mining of lithium and other rare metals. These activities can cause considerable environmental damage, calling into question the sustainability of the production chain. In addition, electric vehicle charging infrastructure is still under development in many parts of the world. Electricity generation to power these vehicles still relies largely on non-renewable sources such as coal and natural gas. Therefore, the carbon footprint of electric cars may be larger than perceived, especially in regions where the energy matrix is predominantly fossil. This is an aspect often overlooked in the enthusiasm around electric cars. On the other hand, Continuous innovation in the electric car sector is leading to improvements in energy efficiency and battery recycling. Companies and governments are investing in research to develop more sustainable technologies and cleaner production methods. However, it is crucial that these innovations keep pace with the rapid pace of adoption to prevent the industry from becoming yet another example of hype-driven surface sustainability rather than a genuine solution to global environmental problems. 7. Regulation and infrastructure. The race of governments to keep up with the market. Governments around the world are implementing policies and investing in infrastructure to support the adoption of electric cars. From subsidies for buyers to investments in charging networks, government initiatives have been a crucial driver for the growth of the market. However, the speed at which these policies are being implemented could lead to market inflation as companies and investors rush to take advantage of incentives before they disappear. Building adequate charging infrastructure is one of the biggest challenges facing governments. Rapid expansion of the charging network is essential to sustain the growth of the electric car market, but it involves high costs and complex planning. In many regions, the current infrastructure is far from sufficient to meet the growing demand, which could become a significant bottleneck and limit the adoption of electric vehicles in the near future. In addition, government regulation needs to balance encouraging innovation with ensuring safety and sustainability standards. Rushing through policy implementation without proper consideration of the long-term consequences can result in short-term solutions that are not viable in the long term. It is essential for governments to work closely with industry and other stakeholders to develop a regulatory framework that supports the sustainable growth of the electric car market, while preventing the formation of a bubble that could harm the economy and the environment. 8. The future of electric cars. Sustainable innovation or imminent collapse. The future of electric cars is fraught with possibilities, but also significant uncertainties. On the one hand, continuous technological innovation promises to make electric vehicles more affordable, efficient, and sustainable. Advancements in battery technologies, such as solid-state batteries, and improvements in charging infrastructure have the potential to transform the market and cement electric cars as the predominant choice for consumers and businesses alike. On the other hand, the risk of an imminent collapse due to the formation of a bubble cannot be ignored. If the overvaluation of electric car companies is not underpinned by sound economic fundamentals, the market could face a painful correction. This could lead to startup bankruptcies, loss of investment, and a slowdown in innovation, undermining the progress that has been made so far in transitioning to more sustainable vehicles. To mitigate these risks, it is crucial for investors, businesses, and governments to take a cautious and data-driven approach. Realistic assessments, strategic planning, and investments in sustainable research and development are essential to ensure that the electric car market continues to grow in a healthy and robust manner. Only in this way will it be possible to turn the promise of electric cars into a lasting reality that is beneficial to society and the environment. The reality can be harsh, and what seemed like a promising path can become a minefield. As we approach the apex of this economic bubble, it is crucial to ask, are we really prepared for the consequences? Could it be that unbridled enthusiasm is blinding everyone to the impending dangers? This is a watershed moment, and the next actions could determine the future of the entire electric car industry. The future is not written, but the signs are clear. With every startup that emerges and every new promise of innovation, the pressure increases. Governments, investors, and consumers need to act cautiously and wisely. We are on the brink of a possible financial catastrophe, and today's decisions can make or break tomorrow's market. What steps are being taken to avoid the worst? And will they be enough? This is the time to reflect and act. We are at a crossroads that requires attention and discernment. The electric car bubble is about to burst, and the repercussions will be felt by all. How will you prepare for what's to come? What steps should we take to mitigate the damage and turn this challenge into an opportunity? The answers to these questions will determine the course of the coming years. Stay tuned, because the unfolding of this story is just beginning.